Most of the losses comes because of this one thing, liquidity. And if you do not understand structure, you wouldn't be able to mark out your liquidity right. In this video, I'm going to take you through how to be able to mark your structure very well so that you'll be able to identify the structure highs and the structure lows rightly, which will enable you to identify where the liquidity lies. Let's get into this. This is a buy structure. So in a buy case, you want to identify the major high first. In this case, we have this high here that we identify as a potential major high. Why? Because it took liquidity to the downside. It was able to take this low out. The reality we know in the market is it's always moving like this. All the time, it has to be moving like this. But you have a case where one high will lead to break this, sometimes even break two of them. That is the high that we are looking for. In this case, we are going to consider this high here. Now, when that high is being identified, you want to wait until it creates the lowest low. Identify that lowest low. That lowest low becomes your potential major low. It is not yet a valid major low until it breaks this major high that you have identified. Now it has broken this major high. It becomes the major low. Price will go all the way up and then return back to find liquidity to be able to travel back again. We have to identify our liquidity by looking at the low that went to break our major high. In this case, we have this low here. This is where the liquidity is lying. Market is going to travel back to that low, and immediately after this low is taken, then you will see market travel to the upside. You do not have to complicate this. It has nothing to do with marking the whole structure and being able to mark it rightly. No, it has something to do with being able to just mark one valid low and one valid high and then identify your liquidity. All you have to do is to wait for market to come to that particular position, and then you add certain confirmations and you take it. You can add confluences too and take it. We'll get into this step by step. This is it for the buy case scenario. In the sell case scenario, we want to first identify the valid low. It's just the opposite. We're identifying the valid high here. Now we want to identify the valid low here, because as I said, this is how the market is supposed to be moving all the time. But this is easy. If it is this way, as people are saying higher high, higher low, higher high, higher low, higher high, higher low, it becomes easy. Everybody can just be taking sales from here and making easy money. But this is not. We all know what is happening in the market. The reality is totally different. Now we are going to wait for one low, which will go all the way up, take at least one high out. If it takes that high out, that's where we are getting interested, because that means that there was liquidity pumped into the market as at that point. So it was able to take out this high out. That means that there is liquidity there. We want to identify that particular low. In this case, is this particular low, this particular low here, that becomes our valid major low, and it took out this high. Now we are going to wait for that high to get broken. After it gets broken, we will identify the highest high that was created before it broke. This is the highest high that was created. Now you trace price until it breaks it. You see, it has broken it. The liquidity is the high that caused the break of this major low. In this case, is this place. This is the liquidity. You have to wait. Market will travel back into that place, take out the liquidity, and then from this point in time, it's going to travel all the way down. If you look at it, you are going to have this place back to the buy structure. You're going to have this place as a major high to now, because it was able to take out this liquidity, And if that high is broken, then this low becomes also a major low. Your structure is now always looking like something like this, up and down, and then we move. Yes, we can still call this higher highs, higher lows, higher highs, higher lows, but we know what is happening inside. This is very important for you to understand how the liquidity is being built up. In this scenario too, it is the same. One thing as we get into this is the structure is independent in terms of time frame. What you are seeing in M15 is going to be different in H1. It's going to be different in H4. To be able to make things always simpler to identify the structure is to just what you see is what you get. Don't complicate it. If you do not see a high being taken out or a low being taken out and creating a major high or low, it is not there, because the major highs and lows in M15 are going to be liquidity in H1 or H4. So we will build this up and then we will get there. I don't want to get you confused, but this is the simple thing that you have to understand. Now let's get into the charts and be able to use this same technique and identify the highs and the lows. This price here, let's start from here. From this point in time, we can see that we got this particular high here that was able to take out this low and then this lows here. We identified that high as our potential major high. Then we have to wait until it is broken. Here we can see that it was broken. We can see that this thing here was being broken, and what broke it is this low here. Always trace price up, look at the pullback, and then push up. You want the low that caused the break of this high here. That becomes your liquidity. The structure and then the liquidity are hand in hand. I want you to understand them both at the same time. We mark this low as our liquidity low. This is something that you need to mark and wait for price to get there. Now I didn't mark here. We mark here to as our major low, and let's delete this. Now this high here that market created, this high is never a major high until it takes out this low, because this was the only low that is within this range here. But price couldn't do that. It just consolidated, went up, and then came down and moved all the way up again. As at this point, this is not a valid high. This is not a valid low. You have to trace price until you see a high that was able to take out a major low again. In this place, we have this high here that was able to take out this low, but after taking out this low, we put out our high here, and then we come back. Let me delete this guy. We come back here and trace it to the low. This low too was created. Now, in this particular case, it's a bit complicated. You may not still be aware of this. And what I want you to understand is it created a low and it didn't trade through to take this low out. So it created another high first. You have to move this high to that high and this low to this low. Why? Because this low, after it has been taken out, it created another high that took out that low. You want the market to be like from this low to a higher high and then higher low, not from a higher high and then it comes to a lower low and then a higher high and then this low becomes lower than this again. We are going up, so it has to be all up. We have this which has been created in this place. Now, since we identify our major high here, we have to draw again to find our liquidity. We draw like this and we see which one broke it. In this case, you can see very well that this is the low that led to that high being taken out. Hence, that becomes our liquidity. You can see very well price tapped into that. Immediately they took out that low, they had to run away. You identify that low as your major from here. This becomes the major high, which led to this low being taken out. We created our major low here, and we went and break this high again. But that high couldn't take out anything. We have to mark the next major high and then the next major low. From here, if we draw from this point in time, and I said use the wicks from this point in time, you can see this high took this and then came back to take this. We have to mark those highs again. So we can mark this high because it took out this low, and then we can mark this low here too because it led to the break of this structure there. And look at this. Where is the liquidity within these two? This low was the liquidity because it was the one that led to the break of this high. Hence, this becomes the liquidity. So we mark our liquidity there. If we had waited this low is taken out, we could be buying this market from here. Now we are waiting again for the market to create another high. From here, we have this high which has taken out this low out, hence it becomes a potential major high, and then we are going to wait for it to what? Break this point. We got it here, it has broken this point, and this becomes a major high, and we are waiting for it to create a low. Let me change this color to another different color again. We are waiting for it to create, sorry, let me put it like this, and then we put it yellow. It ran all the way down and then came to this place. As at this point, the market has changed character. Some call it changing character, but I don't like using such names again. It has broken this low and this low. It has taken two major lows out. What you have to do is to mark this low, which it took out last, and then look at the low that or the high that led to the break of that low here. In this case, we can see this was the low that led to the break of this. This is the high that led to the break of this major low here. Hence, that becomes our what? Liquidity. So we can mark this place as our liquidity, and you can see market travels to that place exactly and then comes down. Someone will ask, what about this one? When we create mark this way and then we see the break, we can have this guy here as our liquidity. Anytime the market comes back here, it's going to target to take this high and then tap into here and drop, depending on the direction. We are not just going to be trading blindly. Since this low now becomes valid, we are going to wait for that low to get broken. That low now gets broken. We are looking at the highest high that was created after it got broken, and then we are going to identify the high that led to the break of it, and this was the high that led to the break, and that high becomes our what? Liquidity. Market comes all the way and takes us and then run down again. We have this is the low that led to take out this high and then this high. This becomes our major low. If we draw it, we can see from here. Now you have to consider the wicks. From here, we drop all the way. See the market from this point in time. This bullish candle opened and went down first, broke this. We are considering the wicks. That means that the low that led to, or the high rather that led to this major low being taken out is this particular one. And you can see how the market came back exactly on this high to still take out that high, because that is the liquidity, to still take out that high before it now went down. And from here, they didn't go down exactly. So we mark this high. They didn't go all the way down because this should be the target. I think this was weakened because of these gaps, and they returned there, tapped there again before they came all the way to break it. From here, you don't mark this high because it's not higher than this high, but you have to mark this high after this low was being broken. From this point in time, now don't forget something here. if we look to the left, we can see that there is this liquidity which we identify first. If you forget, the market never forgets. The market came all the way back to take that liquidity. You see, after taking that liquidity, that is where another big move has come. This is how they do it. They will drop the liquidity and then work all their way out. If you forget, the market will never forget. It will come back, take it out, and then another move will begin. And it's very, very interesting because these levels that is trading from are also levels from the higher time frames. We have confluence that maybe this particular point here may be weekly zone or daily zone. You know exactly where you are waiting for the market. You put where your liquidity is. You can put trend line confluence. You can wait for confirmation. There was a 9 confirmation here, and then you execute the trade and just simply wait. I hope this video has been able to help and then clear the market structure. And if there are questions, please put them in the comment section. I will make more videos to be able to explain this structure to you, but I think this should be able to clear some doubts. And if you have questions, put them in the comment section, subscribe, and let's push this.